what are the implications for the euro if Greece requires a bailout? What other countries may be in jeopardy? Daragh Maher is Deputy Head of Foreign Exchange Strategy at Calyon in London. He is joining us now. Daragh, thanks so much for being with us. First things first, will Greece need any kind of bailout or some kind of support from the EU?
Hopefully not. I think if they follow through on their plan, it's likely to be revised plans. You said at the top, a lot of pressure on them to do more. But if they can deliver on that, then it points towards some kind of sustainability on debt. And I think on that basis, they should avoid needing to call on assistance. Though I imagine, although policymakers don't admit it openly, that assistance would be forthcoming if required.
Daragh, Richard Stoven Bradford of the Financial Times was just telling us a few moments ago that we risk overlooking the problems in Spain by concentrating on Greece as much as we are. Would you agree, perhaps, that Spain poses a potentially bigger problem to the Eurozone than Greece?
I'm not convinced it's a bigger problem, to be honest. I mean, I think you're right. There's perhaps been a fixation on Greece, but I think a good reason for that. It's got a big public sector debt level. It's got a massive deficit. It's got a credibility issue, even with those numbers. Whereas Spain, the deterioration in public finances, I think, is a relatively recent thing by comparison, and they're starting with a much lower debt level. It's reflected in the CDS levels you see in the market. Greece is almost double its next nearest compatriot amongst what I would call the troubled Eurozone economy. So, Greece, I think, rightly is perceived as the greatest threat there.
And, Daragh, if we look at the market's reaction, the euro has been under a lot of pressure. It's up just a little bit today, but it's essentially trading at its lowest since about July. What's the right price right now, risk included, for the euro?
Well, frankly, I think we might see euro-dollar a little bit higher, let's say on a 1 to 2 month view. I think there's a lot of pessimism in the market, not just related to Greece, but Obama's banking sector reforms, issues like that, which has obviously provided a safe haven bid for the dollar more widely. But, if we get the optimism back, related to the economic numbers, which are still pretty good, I think that dollar rally begins to peter out. Euro will be a laggard. So
you don't think 120 euro-dollar is too aggressive?
No, I think, for now at least, I think we've kind of got a fixation on Greece. That will dissipate as the plan gets approved and goes through. We might even see a bit of support going back for euro-dollar, as I say, in the next month or two. I think talk 120 or lower, I think it's just kind of jumping on a bandwagon of Greece at the moment.
Daragh, fairly quickly, George Soros told us in Davos last week that there is no acceptable alternative to the dollar. Are these problems in Greece and Spain undermining the euro's potential as a currency, as an alternative to the dollar long term?
I think it certainly undermines it, but at the end of the day, currency trading at the moment feels like, and it's not a beauty contest, it's an ugly contest. Which is the least ugly currency? And maybe Soros is right. At the moment, the dollar feels like it's holding all the cards. But longer term, euro has volume. It has if you like, that kind of scale that will make it an alternative. But I think the dollar will still be favoured.
Daragh, we thank you so much. Daragh Maher, he is the Deputy Head of Foreign Exchange Strategy at Calyon in London.